One of the things, and a lot of people ask us about it, is the IPO game. And we know there's some big hitters coming. We know Doordash is on its way. We know Roblox is on its way. We know Airbnb is on its way. And one of them I'm looking at too, Affirm. What do we make of it when we're talking about IPOs? How do we invest? When is it a good time to invest? What do we make of the IPO game?
Yeah, I like to play a lot safer than most people because you have the secondary market, right? So the primary market, when it goes through the underwriting and the companies get their hands on the shares, there's a whole bunch of jockeying, a lot of stuff that the average retail investor doesn't know, right? So you see these, a good example would be Snowflake, right? You see Snowflake, $120 IPO, comes to the market at 240, runs to 303, and then retreats back down to 223. And so I like to at least wait a little bit for the company to prove they're profitable. So give it a couple of quarters, even if I'm missing out on certain growth, because as a retail investor, your risk is a lot higher than the institution or somebody who has money. So I always lend on opportunity cost. This doesn't mean like you shouldn't buy it, but what it means is like, I use example all the time. If you go to a vending machine and something costs $1 and you're hungry, you're like, it's only $1. If I don't like it, whatever, I'll throw it out, right? But if that same item costs $10, you're like, I don't know if I'm gonna buy that because that's 10. I never really had it. You start kind of having different feelings about making that purchase. And I think where it gets shaky with IPOs is just that. Now, if you have $1 million portfolio and you can sit on shares and you have a lot of time, that's different. But if you're taking a decent portion of your capital and throwing it into an IPO, then you're in for a roller coaster ride because you have no control. At that juncture, institutions have control. And so the underwriters, right, they have a certain time period where they can't sell and the people involved in the company. So there's a emotional wave when you first get in, right? Because what if it goes the other way? There's no secondary market to hold it up, right? So there's no like options and prefers and a whole bunch of other stuff that set up trap doors for value. So like when you see like Apple and certain companies, there's almost like trap doors where like, okay, if Apple reverts back to like 110, there are people with like options and prefers and a whole bunch of other things and companies and limit orders that keep that stock propped up and it's not going to retreat too far back. When that IPO comes out, it's going to come up, right? And then what's holding it up, right? Usually information or ideas. But once you let somebody in your house, I call IPOs MTV Cribs. Remember MTV Cribs?
Yo, that was a great show.
You used to judge artists though, because there'll be artists that you thought had mad money. The way they was talking greasy on BET.
You remember Redman's crib?
Yeah, that was classic. That's your crib. That's where you live at. And so once you open the door to your house and you let everybody in, they're gonna find there's dust in the bathroom, there's a piece of lint on the floor. So I like to give IPOs a little bit of time, a quarter or two, even a little longer before I'm fully vested. I want to take a lot of my capital and jump in there just because you have no control. And I don't like as an investor, right? There's ownership and there's control. I don't want to own something that I have no control over to a certain extent. So for me, I play it kind of off unless I have capital that I don't care about. Now, if you have 5 or 10 racks you don't care about and you're going to let it ride, let it ride. But this is not an investment that you're going to have any control in when it comes out. So the Airbnbs that are coming, right? The Doordashes, all it takes is one bad quarter for that thing to go the other way. And then
let me ask you a question because I find you say that. So the 4 major IPOs that's coming out before the end of the year, Doordash, Roblox. For people that don't know what Roblox is, that's a huge game.
If you're a parent, you better know what that is. You're getting charged $2.99 a month, if not $9.99 a month.
Wish and Airbnb. Airbnb is interesting because a lot of people wrote them off, but they rallied back extremely strong during COVID.
Yeah.
What I know you're not a fan of investing in IPOs as soon as they come out, but if you had to just say, okay, one is probably the leader in that race, like what's your favorite out of those 4?
I think Airbnb and probably Roblox are somewhere 1A, 1B. Airbnb is kind of revolutionizing the space. As we look at as far as travel and part of leisure. And then Roblox, like again, with kids and games and whatnot, right? Like I see a comment on Doordash. Doordash is cool, but there's a lot of competition in that space. So I want to look where like I don't want the Rocky theory, but with Airbnb, you get the kind of that Rocky theory with all the big hotels, right? The big hotels on the ropes right now. Like it's like when Rocky fought Drago, like he finally got him. This is their big hotels and all this leisure, all this money they're missing out. They're on the ropes. So the right timing mixed with the right amount of spin could actually help them, right? And so when you look at like the Marriotts, the Hiltons of the world, and you look at like what we're doing now, as far as if the timing is right, it's gonna look like they're a lot better than maybe what they are, right? So if the timing is right, if we're able to get, if you get an IPO around like that summertime where like everybody's going on vacation, we've gotten the vaccine, stimulus check hits, that momentum can carry them, right? Like that's a momentum that can carry them. So I like their story. I think like DoorDash, again, a lot of competition in that space with a lot of other companies, and there are more people coming, right? They see.
You know what? The thing about Roblox is interesting because somebody's asking like, what's Roblox? It's a computer gaming for kids. They have the same kind of strategy that YouTube has. Their audience will always get younger, right? So like when people like, yo, YouTube will stay around, yeah, because the audience always gets younger. The only thing that concerns me about Roblox in this instance is that its rise, right, this year is helped by people being home, right? Kids are home, so they're playing more. And I wonder if that will happen in the next year or two, right? When kids are not home all day.
But if you look at like kids, and it's not our childhood, your mom would say, go outside at 8 in the morning. I don't want to see you until nighttime.
Right.
Kids be inside regardless. Like if kids don't be outside. I live in downtown. I will never see kids outside. Like that's not the same way. Manhunt and whatnot. Yo, kids don't be outside. That you know what I mean? There's a whole bunch of other stuff that goes on. So that's what doesn't worry me about that, because the trend of kids being inside the house doesn't change whether it's COVID or not. You're inside a little bit more, but for the most part, kids are running right to the games. As soon as you hand a kid an iPad or an iPhone, the kid is locked in. That's it. You at dinner, your child's wilding, here's the phone. He's locked into YouTube. I know 3-year-olds that know how to work a phone like an adult. And so that doesn't necessarily worry me too much.
All right. Any other questions for our esteemed professor?
Well, we got some hands.
Yeah,
I've never seen this name. All right, let's take this name. Cisco, we come. He's not available to talk. Nadia, we coming to you. Unmute yourself. You've been unmuted.
Yep.
YouTubers, this is what we call a fridge break. Fridge breaks are not allowed here at Alicia University. So we're going to come back to
Arthur. Let's go to
I
Arthur.
see my guy. I haven't heard from him, man. Arthur, what's going on, bro? Unmute yourself. You've been unmuted. What's up, bro? Arthur, you there?
Yep, he did.
He did.
Can you hear me?
Oh, now we can hear you, bro.
Hey, you was good.
Yo, what's good, fellas?
What's good, man?
My guy.
Top earner. What's going on, brother?
Calling now. I'm on the road, so I might break up a little bit. I just had a quick question for Q. I know he said he's not a big fan of investing in the IPOs right now, but I just want to get his thoughts on the rise of the direct listing, on his thoughts on the rise of companies using the direct listing as their route to go public versus using the IPO.
I'm a big hater of that. I think me and Ian hold the same sentiment. I think the IPO route is the best route to go for companies because it gives you an idea and it gives them an idea of what they're up against. The direct listing is kind of like getting in the club through the back door. So it's like, all right, you know what I mean? I got on some boots. I can't get in the front. I'm going to go around the side and get on the side door. I don't like that. It sets up a bad precedent for the company, and it doesn't give the market much information on them. So the institutions that you want to be involved in the name aren't necessarily going to be involved in the name. And so, to kind of dump the institutions to go right to the retail, you're putting yourself at a major risk. And so, like, you need the institutional money to prop you up. You need the institutional funds to keep you afloat. You cannot like depend on retail money. I'm not a big fan of it. I know it's worked for some firms, but long term, like when you start seeing them trade differently and we get into a normal market flow, I don't know how much growth is going to be there when you don't go the institutional route of IPOs. I think you kind of have to go the traditional route. And that's why you see a lot of other companies, they're waiting longer so they have better balance sheets. Like Snowflake did the thing where like, all right, we're going to be a senior in college. Like back in the day, you would go to the league after you went to college for 4 years. Now you go into the league outside of high school, right? And then the market has been reversed. We had a lot of companies coming out of high school doing the Kobe Bryant, Kevin Garnett, and they weren't ready. And now a lot more companies got hip and they've been basically getting their balance sheets better to come out in IPO. And that's why you're seeing these kind of mature companies come to the market and they're trading better. So it raises my antenna when you don't go the regular route. Like, what's wrong with you? You know what I'm saying?
Yeah, you appreciate that question.
Arthur, man, every time you come on, they give you a new name. They now saying that you're the valedictorian of EYL.
Arthur, what's your take on EYL University?
Oh, come on. You already know, fellas. EYL University is the best thing popping out there educationally, as far as I'm concerned, in terms of not just the wealth play, but the community building, all of that that's incorporated with it, I think is very, very key, man. So you guys know I'm a big advocate. I always press for not only for the adults, but for the adults to make sure that they get their kids involved. And then everything that you guys got attached to it, whether it's MG's home buyers course, Wall Street trappers things, you know what I mean? Obviously, you got Miss Business one-on-one with her book on there. You guys always got a good product associated with what you guys bring on. So not only EYLU, but everything that they vouch for is A1. So I give everybody the thumbs up and please go out and support.
Appreciate it. Let me ask you a question, because you used to be a market maker. You're a very smart guy. You've been in finance. Like, what do you think the street value for EYL University is? Like, what's the true price tag on all this?
Ivy League educated
dude. Yeah, I know, Ivy League. All of the stuff that we offer, what do you think the true value is compared to like Ivy League colleges and stuff?
I mean, listen, I'll say like this. Most of those colleges, what you're essentially buying is reputation, not necessarily. It's not so much the information that you're gonna get. What makes Harvard so official is the alumni that have graduated, and now if you graduate from there, you just have a reputation attached to your name. It doesn't necessarily mean that you're the smarter guy. You know what I mean? I think with EYLU, what you're gonna definitely get, and I think this is why I say it's not just about college. This is something that high school and middle school kids should have as well, because this is real world applicable knowledge. It doesn't matter what your career is. It doesn't matter whether you're going to get a job or whether you're going to be an entrepreneur or whether you're a professional athlete. The things that you're going to learn here are real world applicable from day one, whether it's just learning how to save, whether it's developing the mentality that you need to run a business, or the mentality that you need to be a trader, or the mentality that you need simply to pay your bills on time. Like, these are all of the things that you learn that are day one applicable. There are a lot of people who are graduated from Harvard, who have graduated, you know, and I mean, not just to say the Ivies, but graduated from state schools, because them shits ain't cheap either. You know what I mean? And they don't have no real, right now they're struggling. They can't get a job. You know what I mean? Because they don't have a real world applicable, what's the word I'm looking for here? Skill. You know what I mean? And so EYLU is like the generational wealth trade school. You know what I mean? Like, you're going to come out of there, like if you're an electrician, you know you're going to get the work. You come out of EYLU, you're ready to get the work and apply it not only for yourself, but hopefully for your family and your community as well. So I would say value-wise, like, you know, like EYLU is like the Corvette of the supercars. You know what I mean? Like, you could go, like, you got Ferraris and all of that, but you can go right now, you can basically get you a nice vet for 80 grand, 200 miles an hour, and blow most people out the water. I'm going with EYLU all day.
Talk to him.
Vet. I like that, brother.
Talk to him.
Arthur, always a pleasure, my brother. I appreciate you.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.